Welcome to this strategic assessment presented by HDIN Research. Today, we will examine the PTT Group's strategic transformation as of January 2026. This analysis evaluates how Thailand's national energy leader is navigating the complex shift from traditional hydrocarbons toward a sustainable, diversified growth model. We begin with the situation analysis. PTT remains the foundational pillar of Thailand's energy infrastructure and a critical engine for the nation's industrial economy. On this slide, we look at the financial scale. Despite global price fluctuations, PTT maintains a massive revenue base of approximately 3.1 trillion baht. Our data shows EBITDA resilience at 396 billion baht for the 2024 fiscal year, which provides the necessary liquidity to fund high-intensity capital expenditures through 2030. Infrastructure remains PTT's primary competitive advantage. The group operates an integrated gas value chain, including over 4,500 kilometers of pipelines and 6 gas separation plants. This control over the force energy security for the power sector and provides a stable feedstock for downstream industries. PTT's portfolio is diversified across the entire value chain, from PTTEP's upstream exploration in North Africa and the Middle East, to the massive refining and petrochemical capacity in the downstream sector, and finally to the retail dominance of OR. The group captures value at every touchpoint of the energy cycle. Moving to the complication. No market leader is immune to external shifts. PTT now faces a, double challenge: extreme commodity price volatility and the global mandate for a net zero transition. Price volatility is a persistent headwind. As shown in the trend chart, Dubai crude and petrochemical spreads have been inconsistent. This impacts the Singapore cracking margin, which tightened significantly in 2024, placing pressure on the group's refining profitability. We compared PTT against regional peers. While PTT leads in market dominance and ESG ratings, there is a visible focus on closing the gap in innovation spend and operational efficiency. The radar chart illustrates a well-rounded but mature profile that must now pivot toward higher growth segments. Beyond the market, regulatory shifts are complicating the landscape. The single pool gas price policy reallocates resources to the residential sector, increasing costs for industrial processing. Simultaneously, the upcoming Thailand Climate Change Act introduces potential carbon costs that fossil-heavy assets must eventually reconcile. This leads to the central question for the 2026 to 2030 period. How can PTT lead the national energy transition while maintaining the resilient financial returns required by its stakeholders? The answer lies in a two-pronged approach: the Strategy 2025 operational roadmap and the C3 decarbonization framework. The roadmap is clear. In the short term, PTT is focusing on gas efficiency and EV infrastructure. By 2028, we expect to see the Clean Fuel Project reach full maturity, followed by a massive scaling of renewable equity capacity to 15 gigawatts by 2030. Strategy 2025 is built on 5 enablers. Most notable are operational excellence via the Mission X project and the aggressive integration of AI through Project Axis, which aims to generate 12 billion baht in financial benefits through digital optimization alone. Decarbonization is structured around the C3 framework. This involves making the portfolio climate resilient by exiting coal, becoming carbon conscious through carbon capture and storage, CCS technologies, and fostering collective action via large-scale reforestation. Capital allocation is the ultimate indicator of strategy. Over 30% of committed CapEx is directed toward gas transmission and infrastructure. However, there is a growing future energy bucket that includes non-hydrocarbon investments, reflecting a disciplined but certain shift in capital priority. Diversification is moving beyond energy. Through Innobic, PTT has entered the life sciences and pharmaceutical sectors. Simultaneously, the group is leveraging its retail footprint to build an EV charging ecosystem and exploring the global LNG trading market as a regional hub. Looking at recent performance, 2024 served as a proof of concept. With nearly 3,000 EV chargers installed and a top-tier AAA ESG rating from SET, the group is demonstrating that it can meet sustainability milestones without compromising its operational core. Governance remains a stabilizing factor. PTT continues to align with international GRC standards, maintaining, excellent corporate governance scores. This institutional stability is vital for attracting the long-term investment needed for the 2030 transition. The vision for 2026 and beyond is one of sustainable energy for all. PTT is positioning itself not just as an oil and gas company, but as a diversified technology and energy provider for the Southeast Asian region. Thank you for your attention. This analysis concludes that PTT Group is effectively managing its transition risks. For deeper market intelligence or bespoke research on the Southeast Asian energy sector, please contact our team at HDIN Research via sales@hdinresearch.com.